Tokenization of real-world assets in crypto is by no means a new thing, and if you have at all used something or did something in DeFi, apart from shitcoin trading on Solana, you likely already have had exposure to it. And by that I mean stablecoins. Guess what the USD-pegged stablecoins like USDC and USDT are? Well, tokenized fiat money. And $1 on-chain supposedly is represented by $1 that the company has in reserve. At least that's the assumption, and otherwise, if that's not true, the whole crypto with a $160 billion stablecoin market is on a very shaky ground. Anyway, stablecoins are not why you came to this video. RWA, or real-world assets, tokenization, put on blockchain, has been quite booming lately. There are quite a few new projects and some bigger, older projects starting to introduce real-world assets as collateral, so different ways they are getting their way into crypto. The idea is pretty simple. Just like you can buy shares of a publicly traded company, you will be able to buy shares or tiny parts of some real-world asset. So because you cannot do it in real life, if you, let's say you take an artwork, you cannot just buy a piece of an artwork. If it's very expensive, even though you may try to cut a piece out, it wouldn't work. Instead, what you can do, you tokenize it, and then you create, let's say, 1,000 tokens that represent this artwork, and then anybody can get a share, 1/1000th of, by buying one token, they get 1/1000th of ownership of this artwork. So that can be done for other assets as well, as I just mentioned. So I guess it's pretty understandable and pretty intuitive. First of all, you remove a lot of the middlemen that are involved in TradFi for trading all these real-world assets. So if you just take that thing and put it on blockchain and crypto, first of all, you have the decentralized infrastructure that does not need to be maintained by some centralized entity, so they don't need to put their own resources into it. Then you don't need to pay salaries or anything to people who are going to be actually then making the contracts and everything. So smart contracts are written once and you have them. So you remove a lot of the fees associated with the middlemen and all the infrastructure costs of TradFi, and therefore you reduce the costs for the assets themselves and kind of making the capital more efficient by not spending it on things that are not actually the physical asset itself. Secondly, it also refers to addressing the issues that TradFi has, and that is blockchain does not have bank holidays, blockchain does not have working hours. It works 24/7, whatever time zone you are in and whatever place you're in. So ideally, unless it's an interesting censorship case, that's not supposed to happen. With tokenization, you don't necessarily have to take one huge artwork that is very expensive. You can split a smaller stock into many more tiny pieces, and multiple tinier pieces of some kind of single stock become more manageable as well, and that also reduces the barrier to entry. This can be a good thing because it gives access for the non-institutional investors who know what they're doing but just don't have access to the tools to actually invest into these kind of things. But on the other hand, it also brings people who are very likely to lose their money into the industry, into the market. And lastly, because this whole thing is put on blockchain, everybody becomes a bit more accountable for their actions. The companies, the traders, everybody sees what they're doing with the assets and what they're buying, what they're selling, and what the previous history was. So that kind of puts, again, more accountability to them. But keep in mind that this whole transparency, decentralization, and all the buzzwords that we have in crypto, well, they do have a very good aims and goals in mind, and I mean in the background, but it really depends on the type of blockchain you're using, because yes, blockchain is kind of transparent, that's the inherent property of it, but if that blockchain is permissioned, that transparency is only for permissioned actors, so that does not really make any sense for calling it transparent and super cool and decentralized, because yes, that's just a different way for permissioned actors to manage and talk to themselves. And maybe the trust can increase between those permissioned actors who are in the circle, but for everybody else, this stuff being put on blockchain does not give much more transparency. As you can kind of feel my attitude, it's a little bit critical towards this whole thing. However, it does not mean I'm against real world asset tokenization. I think it is when it's in the right place at the right time for the right asset, it can be great and it can really solve a lot of problems. However, just this whole boom that is happening right now, there are many things that you should really keep in mind, and there are a few more things to consider, although I already mentioned quite a few critiques. So firstly, that you have to keep in mind is regulatory uncertainty. There can never be any kind of regulatory certainty around crypto, of course, but when it concerns TradFi being brought onto DeFi, and you try to kind of marry the two and work with the regulators, it may be very difficult to stay compliant. And not only that, the compliance laws are different in every country. Then another thing I wanted to mention is that while smart contracts, again, as I before said, they are great. You just make them, they get executed. Once conditions are met, everything is fair and nice. But the exploits that happen, and because the crypto industry is so new, this is a risk worth talking about. Everybody has some kind of risk, any kind of technology, not everybody, but anything you use has some kind of safety risk. And the safety risk of smart contracts is quite high in comparison to any other more protected ways of interaction with this kind of assets. I already mentioned that the barrier to entry lowers, which can be both a good thing and a bad thing. But speaking of lowering the capital, there is also fragmentation of capital, because there are so many projects that are just joining the hype wave of real-world asset tokenization and joining it by launching their own project. So there are multiple different smaller projects that all have some kind of capital locked, and users invest in different ones. So this gives a bit less kind of freedom of movement to each individual project. Anyways, I want to reiterate that I'm by no means against real-world asset tokenization, and it can have a very good place, and it also brings capital, which can also bring some more good things and growth to other sectors, even if you're not in the real-world asset kind of whole hype. And now let's go over some big 5 projects that I found, maybe a bit more than 5. Just try to take into account the TVL and the market cap, and of course might have missed something. So feel free to add your own findings in the comments and to mention some other projects. Let's start with MakerDAO and its famous stablecoin DAI. So it's not directly a real-world asset-focused protocol, it's just a protocol on Ethereum that launched its own stablecoin DAI. And users generate this DAI by depositing some stuff as they have as a collateral in the MakerDAO vaults in the protocol, and then they get DAI for that. And out of $8.5 billion of DAI's collateral, $2 billion come from the tokenized real-world assets. At least that's according to the DeFi Llama, as you can see on here. So here, even though we don't have direct involvement with real-world assets, MakerDAO, Maker protocol, is one of the top. Actually, it was number 1, and now for some reason it is number 2 by TVL in the real-world asset sector. So this may signify that it's not the newer projects that are going to be the biggest booms and bring the most capital into the ecosystem. It may be the bigger projects stepping into the industry of real-world assets and, let's say, introducing them as a collateral for something or in any other way. And we have a few similar projects that are bigger ones, but are introducing real-world assets into themselves. So there is Frax Finance that also uses RWA as a collateral for its USD-pegged stablecoin Frax. And another famous protocol that leaned into RWA is RV, that uses RWA to generate revenue from the idle assets. And now let's talk about Ethena, which for some reason is number 1 in the RWA list of DeFi Llama, but it's not really an RWA project. If you have a slightly deeper look, just literally one link deeper, Ethena is just a stablecoin, and in fact, it directly tries to put it on the other kind of we are not like other stablecoins kind of stablecoin. So it tries to be an alternative to those stablecoins that are backed by real-world dollars by being backed by crypto-native assets. So it was literally publicly launched in February, so 2 months ago, and it already has over 2 billion market cap. This just shows how much stablecoins are prevalent in the crypto industry over anything else. And its ticker is USDE, and it's collateralized, as I already said, with crypto assets, and that includes ETH, liquid staking tokens for ETH as well. Bitcoin recently was introduced, and yeah, you can also, of course, deposit your US dollars to mint USDE. The next one on the DeFi Llama list is staked USDT, and if we go onto the website, what do we see? We see that it is yet another stablecoin. So it is a stablecoin that you get as a receipt for staking your USDT. A bit more interesting than Ethena is in terms of its involvement with real-world assets. And yeah, the APY is not absolutely crazy, so that's a good thing, at least I think so. And the next one that I would like to talk about is Ondo Finance. Ondo Finance was recently rumored to be coming to Binance at some point soon. So it has over 260 million in total value locked, which is quite significant for the project that is purely focused on RWA. And another notable feature, apart from its potential rumors of a Binance listing, is that its token sale was on CoinList in May 2022. And the project is more involved in real-world assets as well at the user level, because it provides liquid exposure to ETFs of short-term US treasuries. And the project was launched in 2021, is based in the US, and focuses mostly on the US debt market. The ecosystem includes its own subsidiaries that are managing and releasing tokenized assets that people can buy, but they're also releasing some software protocols that are like the tools for creating and facilitating real-world assets. Anyways, so if you're interested, I would recommend you to check out Ondo Finance and potentially wait for its listing on Binance if the rumors are true. And the next project I would like to mention is Centrifuge. It was ranked number 7 in real-world assets in the Drops tab website. It's a very useful website. If you don't know about it, I recommend you to go and check it out. So Drops tab ranks them by market cap. Its market cap is $450 million. So Centrifuge, unlike other projects that are mostly focused on stablecoins and USD pegged and US Treasury bonds, something more less volatile actually. So this project is more on the giving the users the ability to tokenize their stuff. So it gives users and organizations the power to go and tokenize and finance their own real-world assets. And that can be anything ranging from like invoices and loans to some kind of artworks and real estate if you'd like. It has a well-standing investor list and good partners. So if you are interested, I would recommend you to go check out Centrifuge. And it also was rumored to potentially launch on Binance. So maybe wait for the launch on Binance as well at some point for what it is worth. And let's go to project number 6, and number 6 is PAXOS Gold, and that's kind of as a bonus one because I wanted to go for 5, but I really don't consider Ethena as a real-world asset project. So let's go to Drops tab for PAXOS Gold, and you probably are familiar with PAXOS blockchain because it previously had the news of partnering with PayPal to launch PayPal's stablecoin, USD stablecoin, PYUSD, as I remember. So PAXOS Gold, as the name suggests, just represents gold tokenized on blockchain, and each token, as they're saying, is representing the ownership of 1 fine troy ounce of a London good delivery gold bar. And according to the project, this physical gold is stored in vault facilities under the custody of Paxos Trust Company. And while already recording this video right now, I did not realize there were quite a few other, actually, not quite a few, because other ones literally have no market cap. So we also have Tether Gold. And if you're interested in investing in gold on blockchain instead of the real world, that would be an interesting decision, I think. I'm not sure why you would do that, but I guess it's much more convenient for some people. I hope this was a nice and concise glimpse into the real world assets world, and thank you very much for watching, and see you in the next one.